Hey everyone, it's Ed Kime from over at Quantcha, and welcome to the 2019 Quantcha Challenge. The Quantcha Challenge is a new initiative that we're going to start back up from. We had it running a few years ago and it was pretty successful, and it's pretty simple to understand. All we're going to do is we're going to manage an options portfolio using Quantcha. We're going to take a real account starting with about $25,000. It's actually a little bit over right now where we start with. And it's going to be a flat book that we add positions to and we manage them and we exit. And we try to illustrate as part of this how to use Quantcha in a practical way. Now that we've gotten leaps and bounds ahead over the past year with our trader integration and our improved broker support and our increased data and our advanced functionality with charting and reporting and all that kind of stuff, a lot of questions have come up about how do you practically use Quantcha to manage your end-to-end option investing. So the primary goal of the Quantcha Challenge is to illustrate the practical usage of Quantcha for options investors. Now, as part of that, we're still going to go out there and we're going to manage our risk through sizing and hedging and beta. We're going to take a look at the S&P as our market proxy and try to hedge out the risk we have of significant movement like we saw over the past couple months at the end of 2018. But at the same time, we're going to try to produce some consistent growth over the long term. This isn't going to be about going out there and trying to hit a bunch of home runs. Instead, we're going to take a bunch of good ideas about stocks and some technical approaches to options investing, and we're going to try to make some money. And we're going to do this by employing a variety of strategies and techniques. And this is partly to illustrate how different kinds of investors can make money, but also how you can manage your trades. And some of our trades aren't going to go the way we want them to. So how you hedge out of them or how you exit or when you exit, all that kind of stuff and how Quantcha helps you manage that is really important. And in addition to that, since a lot of people don't have the time to sit at their desktop or their phone for the market days, we're going to try to minimize the amount of time we spend trading. So we're going to do a bit of research ahead of time to figure out if there's any positions that we want to go into. For example, stocks we want to be bullish or bearish on. We'll try to get that done ahead of time so we come in with ideas. But there's going to be other times when we use Quantcha to try to figure out if there are specific stocks we should go out there and target. And we're going to minimize the time spent trading. That doesn't mean that we're not doing some research ahead of time, but also obviously you're on your own for any of this. This is just an illustration of our tools. We'd like to make money, but the goal is for you to be more successful in managing your investments when you use Quantcha. So let's talk about the very short-term goals of January 2019. Well, by the end of the month, what we'd like to have is a long short book in place. This is where we have relatively evenly weighted bullish and bearish trades, ideally offsetting within certain sectors or certain approaches or certain market theories and so on. And the goal there is to just say that we don't want to be hardcore long or short or just taking a bunch of guesses. We want to try to balance it out so that if we're right more often than we're wrong, we will nicely gain some value. We also mentioned that we're going to try to hedge out market risk. We're going to use the S&P as our market proxy. We have a ton of functionality throughout Quantcha that talks about beta weighting of your deltas and your gamma in order to try to figure out if you are bullish, bearish, or neutral on the market, or what kind of exposure you want to have, that it's easy to get that in place. For the purposes of January 2019, we're going to try to gain 1% on the portfolio. Now, we're starting with cash of about $26,000, so the goal is to just be up $260 by the end of the month. Now, of course, we're going to take some hits on liquidity. We're opening a bunch of positions this month. We're going to do a bunch of trading. So, of course, all of that is going to be impactful as to what our final results are. But let's take a step away and let's jump right into working with the tools. So, here I am on my dashboard in Quantcha. This is simply one link off of the homepage. And we'll take a look at the portfolio here. This is pulling in data from our account that is managed, the brokerage account over at Tradier. So this is a linked account with Tradier Brokerage. We're using the Quantcha Unlimited plan, so we're not paying any per trade commissions. And as a result, we're not going to see any of that stuff show up in our trade ticket. We've got a little over $26,000 here. There's nothing in the book at this point, and we're just going to open up today with one trade. We are nearing the close of market, so we're just going to be pretty simple. And we're actually going to search for Microsoft. I'm a big fan of Microsoft, just a ton of positive feelings about the company. I've clicked through, and this is our Microsoft overview page. We can see a chart. This is the current day trading. We can go in if we want to drill in and get to the minute bars and see the details about exactly how we got to where we are today. But we'll skip some of this stuff. Today's really about opening up a position, just getting something on the books, and moving forward with the Quantcha Challenge. Now, simply put, I want to open up something for next week for the January quarterlies. So I'm going to click, I'm sorry, the January monthly options, and I'm going to click here. This is our display showing the different expirations and how they relate to implied volatility, historical volatility, and so on. I don't care too much about that. I'm going to select that 9-day out expiration. I'm going to select a neutral view, and we'll go into detail later on about exactly how that stuff comes into play. And right now, the main thing to know is that we have a neutral view that's been configured for us here, which is a plus or minus 1 vol movement over that range. I just want to open up with either a secured put or a covered call position. So we're going to let Quantcha say we just want to either see secured puts and covered calls. We're going to leave the rest of these things alone, and we're looking at the best trades that are available here for the 50 options that were selected. I'm actually going to notch this up since I'm on a reasonably powered machine. I can squeeze in more options here to analyze. And we're going to look for the best available trade we can get for a neutral view to get the best average return for Microsoft for this time frame. And in this case, we look like we can get almost 1% of our, what would be a minimum about $10,000 investment for Microsoft by selling the 103s. Now, I happen to prefer not to sell in the money short, so we're going to get rid of those. And we're looking at a covered call selling the 105s. I'm pretty happy with that, so let's go ahead and take a look at the trade itself. Quick checklist. Earnings, yes, we want it to go before earnings. We have good liquidity on the options. Our price range is pretty broad, likely to be profitable, and there's an average probable return for this particular trade. No mention of dividends since those happen later on, so we're looking pretty good. Now we stand to gain if we take a look here. If we get our max return, that's going to be, in this case, 2.13%, so about $219 here. That'd be pretty nice to get. That'd get us a long way towards our goal of $260 for the month. And if it drops, of course, there's some downside there. But we're not going to worry too much about that for now. Ordinarily, I'd like to take this and model it in my book and take this and figure out how I want to see what it impacts my current holdings, but we really don't have anything. And so I'm going to step back into the trade analysis. We're going to go right to the trade ticket for my account. And we can see here, it sets up the trade ticket for us, pretty straightforward. I'm going to try to see if I can't close it at the midpoint. Preview the order. Pretty simple. Place the order and see if we can get that filled quickly enough. This is the only trade we're going to deal with today, and it filled immediately, which is kind of nice. We got what we were looking for. And we are now in. So if I head over to my portfolio, I can now see that we have a position. Now we are technically down $1. That is, that's our snap on the play. Every football play starts on a guard line. As soon as you snap it, though, you're losing that yard or so. That's for the liquidity hit we're taking here. But we're going to leave this as is. It looks like trade's already going in our direction, but we'll hold on and see if we can do better than that $1 gain. And so that's all we're going to do for today. We're going to step out now and wish you good luck and good hunting.